Welcome back to Getting Real, where founders, leaders, and investors pull back the curtain on what it really takes to navigate growth, uncertainty, and purpose in today's world. I'm Dan DeShulo, and today I'm sitting down with Timothy Enneking, managing partner of Salion and one of the earliest pioneers in digital asset management. Tim has over 35 years of experience in finance, asset management, and global operations spanning Europe, the US, and Asia. He's completed transactions in over 30 countries, totaling more than $12 billion in value. He's managed both then the all-time best performing traditional fund of funds and the all-time best performing crypto fund, the legendary Bitcoin fund, which returned over 5,500% in its first full year. Tim was the founder of Terra Capital Fund, one of the world's first crypto trading funds, and went on to manage the crypto asset fund and launch Crypto 30, the first professional index in the digital asset space. But behind those numbers is a fascinating story about conviction, risk, timing, and the psychology of money. Tim, great to have you here.
Thank you very much, man. Appreciate it. A couple of nits I think need to be rearranged in that intro, but the overall spirit is there. My hair is a different color than yours, so there's a lot of
It's
stuff
hard to
in them.
sum up that much experience. But you've
Exactly.
spent decades moving through every layer of global finance. What drew you into this world, and what was the thrill of the deal, the fascination with systems and value? What got you started?
Well, you listed a number of qualities and aptitudes there, but you left out the one that may be the most important, and that is very frankly dumb luck, right? Serendipity. There is in any successful career, no matter how bright someone thinks he is or is not or whatever, luck plays a role, my friend. It is. I think back to certain key moments in my life, and sometimes I was kind of sort of in control or like to think I was, but there are some very, very important moments where just dumb luck coincidence had a huge effect. Nexus, really key moments. And the rather strange series of events that brought me to Bitcoin in 2000 actually started, as I think about it, 2012 and gained some momentum in 2013, which we can talk a little bit about if you like, but it was luck or coincidence or whatever played a massive role in that. In fact, it was to do with the skill set that I have that had nothing to do with crypto or finance or anything else.
Well, it seems like the most humble answer you could give, but when you think of dumb luck, like what makes you smile the most in terms of looking back? What's one of those moments where you're just like, man?
Well, you talked about the fund that had it's a fund of funds. It was called Terra Capital Fund and was focused on Eastern Europe, and it did indeed have it still has, as far as I know, it still has the all-time performance record, both annual and monthly, for a fund of funds. Not sure, I haven't checked it in years, but at 5,000% for a year and 600%, I think it was 600 something, 500 something for the month. It was, if we're now number two with those performance numbers, I'll still be I'll die a happy man. But what led to me getting involved in crypto was a presentation I gave about the fund of funds. And I like public speaking. I teach it, I coach it, various other things. And so I did this presentation using a technique that I saw from somebody else do years and years and years ago, where you rapidly, slides have like one picture or one word on it, or it may have several, but you build them. So you show a new slide, it adds one picture and one word. Very fun way to do a presentation, if for no other reason that doesn't allow people to read ahead, so they have to pay attention, right? And so I was doing this and did the presentation, went very well. They're always very well received. And then after I did this presentation, literally, this is 2012 in Moscow, Russia. And these guys came up to me, these Russian guys came up to me afterwards and said, look, we have set up a new exchange that it's kind of like Interactive Brokers, does everything, does, stocks, bonds, multiple jurisdictions, FX, all kinds of stuff. And we're doing a what do they call it? And it was kind of like an award ceremony and a big demonstration all rolled into one in Porto, Portugal, and in May. And they said, we'd like you to be the master of ceremonies. And I thought, well, cool. I've never been a master of ceremonies of anything, but I've not been called shy in a number of decades. So I said, yeah, sure, I'll do your ceremony. And so I started working with them to get familiar with what they were doing. And it turns out they had launched what, as far as I know, is the world's first crypto fund. Of course, this is late 2012, there's only BTC, and they had cleverly called it the Bitcoin fund. And I had experience in fund management then. I don't know how much I had, 10 years at that point in time. And then so over time, they, a couple of weeks, couple of early months, they learned what my other skill set was aside from public speaking, the substantive stuff, 2 + 2 = 5. Then they said, look, how would you like to manage this fund? And I said, the Bitcoin fund? The hell's a Bitcoin? And they said, yeah. And I said, look, it turns out that when people subscribed to the fund, they bought Bitcoin, people redeemed from the fund, they sold Bitcoin. No discretionary management. What they wanted was somebody who could handle all the mechanics. I said, okay, yeah, sure, I'll manage your fund as long as there's no discretionary management in this weird Bitcoin thing. So I dug into what Bitcoin was, and I dug in. I read books on the tulip mania it was actually the late 15th, early 16th century, because it lasted like 5 years, but straddled 2 centuries. And then I looked into Ponzi schemes, Mr. Ponzi, Charles, I believe is his first name, in New York, dug into everything. To me, what we now call fiat current regular currencies were up here, and Bitcoin was down here at best. And I dug in. Is it a Ponzi scheme? Is it a pyramid? Everything. It's not. And so then I started looking at what the US dollar was and what fiat currencies were. I don't want to belabor that point, but I realized that there's nothing like apparently wrong with Bitcoin. But I spent so much time digging into Bitcoin, especially the tulip mania, that for this award, it turned out to be more of an award ceremony and a thank you to their initial customers. The theme was Holland and tulips, because they're all laughing at me how much I dug into it. So it's all, there's some, beautiful Portuguese girls handing out tulips at this thing. The whole thing was in this pale purple for whatever reason, tulips all over the place. It was quite funny. They're both, I guess, appreciating all the research I had done and laughing at me at the same time. So that's why I got involved in what we now call crypto, right? And so I put a little bit of my fund of funds. I had a fund of funds focusing on Russia. I did not like what Putin was doing, so I started pulling money out in 2013. This was, if you remember, when he invaded Georgia, he took North Ossetia, Seven Ossetia is in Russian, I almost said it, and a small area called Abkhazia. He took both of them from Georgia, and it's like, okay, Putin was great right after Yeltsin, was like totally an alcoholic, and Russia was falling apart. This is after the Soviet Union had fallen apart, and Putin kept it together. And since it would have broken into like 30 different countries, some of which would have nuclear weapons and been probably Muslim fundamentalists, struck me as a good thing that it did fall apart at that point in time. But, there's the lovely phrase, power corrupts, and absolute power corrupts absolutely. You can see a living example of that in Putin. So I didn't like it. So I was going to shut down my fund. But instead, I took what I called what was Terra Capital Fund and turned it into the cryptocurrency fund, and kept almost all my investors, because they're adventurous to invest in Russia. They're adventurous to stay in crypto, and launched it out of Russia. I'd done this shortly after that. And then eventually I had to shut that fund down because I moved back to the US, and it's kind of hard to run an offshore fund from the US. And I set up a crypto trading fund in the US, which is already 8 years old. So there's sort of how I evolved into the crypto space. So as a result of that, as far as I know, the cryptocurrency fund was the first trading fund in the crypto space.
You got this most interesting man alive sort of energy about you. You've built companies, turned them around, and you've lived in different places around Europe, Asia, US, or traveled to. What's that global experience do in terms of shaping your perspective on capital, culture, opportunity, just with the wide range of experience that you've had?
Yeah, I was raised in Hong Kong. I was born in the U.S., raised in Hong Kong. I've lived in, as you said, a number of different places, visited about 80 odd countries, which, it's a little over a third. It's really not that many, but it's more than most people have a chance to visit. And I really like that. I really like seeing new places. And I have to tell you that there's a book William Shearer wrote right after the Vietnam War called The Ugly American. And so that phrase, the ugly American, has really entered the lexicon, largely because, unfortunately, U.S. citizens call them Yankees. Outside the U.S., you can call everybody from the U.S. a Yankee. Yankees deserve or keep renewing the reasons why the ugly American phrase was coined. And the biggest thing that it's taught me is there's There's not a right way to do most things. There's the way you're used to doing most things. And if you want to avoid the ugly American label, then you shouldn't hide behind the fact that you have an accent that's like a Canadian. There are more and more Americans doing that now because of the current president in office. There's a whole thing. There's a word for it. I forget what it is. But the real key is respect, and to understand that the way you do things is not the right way. It's also not the wrong way. It's just your way. And the best example I can bring of this is when I first moved to Paris in mid 1990s, and I brought an American girlfriend with me, which was a horrible mistake for a whole bunch of reasons. But anyway, she saw a keyboard in my office, a French keyboard, where the vast majority of the letter keys are the same. There are some small changes, but all the function keys above and all the special keys are all different. And she looks at the keyboard and goes, "Why are all the keys in the wrong place?" And I thought to myself, wow, I don't even know the frame of reference behind asking that question is so off from what I'm doing. I don't even know really where to start. But it is a lovely anecdote to illustrate that the difference between the right way, the wrong way, and our way, or the right way, the wrong way, and the UK way or the Zimbabwe way, they're not the right or the wrong. It's just the standardized way that you in a given culture, that people of a different country, people of a different linguistic group, for instance, it's the way they're used to functioning. And it's not right or wrong. It's just standardized. And standardization, by the way, I think is probably the one aspect of culture that is by far the most important and the least recognized. But it's critical because how do you type quickly? If you look at each typewriter keyboard or each computer keyboard, and the keys are in a different place. Can you imagine playing seek and find if they're randomly sorted? I mean, that standardization, which we all take for granted, we don't even think about, is hugely important. And it applies to many, many aspects of a culture. From a business standpoint, my favorite is I tell people I practice international law, international business. I have 5 degrees, horribly overeducated and underpaid. And it's like if you're looking at how to do a deal in a given country, the rules are different, but they're not randomly different. They're different. They're just different ways to address the exact same problems. Because while the solutions aren't standardized, the problems are very standardized. So let's say you're buying or selling real estate. So you have a building and it's on a piece of land. In some countries, like in the United States, they live separate lives. You can sell the land, you can sell the building. They kind of go together usually in a domestic, residential real estate, really 99.99% of the time, they follow the same route, but they don't have to. So in large cities in particular, you'll have buildings going one way, land going another way, leasing and everything else. In different countries, European and some Asian countries, if you sell the land, the building goes with it. So you actually never buy and sell a building. You buy and sell the land. That's it. In other countries, the land follows the building. So when you buy and sell a building, you'll never sell the land separately. It just follows. And so when you're used to those sort of paradigms, sort of walk in, actually flew into Prague one time from London. They asked me to come in and help close a deal that I'd actually negotiated. And the whole thing was, okay, what paradigm do you follow for legislation, for telecom regulations? What do you do for what do you do for this? What do you do for that? The paradigms are limited because people are people. The problems are the same. The solutions will take a different tack in different countries, but they're not totally dropped from space, right? There's a logic behind them. And if you respect the cultural aspects of different countries, different people, the fact that they do things differently, that doesn't mean they're wrong, you're right, or vice versa. It's just a different way of solving the same problem. It goes so far to avoiding the ugly American label and really having people, love and respect you.
So leading with respect, empathy, and understanding is that's how you're approaching relations around the world, and
Always,
that yeah,
always, always.
yeah.
You don't walk in, you don't storm in, and assume that everybody is going to follow your lead. And when I've represented, I've been in a lot of deals, and when I'm on the foreign side and the Americans come in, I just look at them. It's like, oh my God. And you lose because of it. The deal becomes harder. And what's more important is the execution of the deal, the implementation of the deal, whatever you're doing, becomes light years harder because you end up turning everything into zero sum game. You're fighting one way or the other. Horrible way to do business, and it reduces the odds of a deal getting done at all.
Have you thought of running for president?
To the extent that any, I guess, U.S. citizen, because it's one of the only post in the office where you have to actually be a born and raised, and you can't
Yeah.
be a naturalized U.S. citizen. If there's anything that would discourage anybody from becoming running for president, I think it would be the last couple of elections.
Yeah, yeah. So, before crypto, before digital assets, you were already in the game of managing people, managing money. What first made you to believe when you were doing the research on blockchain that it wasn't just a trend? You mentioned you sort of deep dived into everything, but when did you know that it was an inflection point?
Well, I have to confess I was a bit of a wimp about it because I always kept my day job, if you will. And in fact, it wasn't until last summer, summer 2024, I had been the CIO, the chief investment officer of a 9 wannabe 10-digit family office in Southern California. Did no crypto, had nothing to do with crypto,
Really?
and I tripled its AUM, its assets under management in three
Yeah.
years. And so I was very happy with that. But by last summer, it was very clear you could do more than well in the crypto space. So I stopped doing that. So I hedged my bets, I guess, is one way to talk about it. But there's a phrase that I used way, 12 years ago and to describe crypto. And that was, it's crypto isn't even a pimple on a gnat's ass. Right. That's the old phrase. It's just too tiny. And after a couple of years, I was like, okay, it's a pimple in that sense. We've hit that level. And then I stopped using that metaphor because I was getting tired. I said, look, you don't have to be what's now called a Bitcoin maxi to support crypto. You don't have to think that Bitcoin is going to replace the dollar. Certainly not going to do it in the short term. If it does it in the long term, we don't have to worry about that now. But one thing became very clear about 2015, 16, so just before the ICO boom, was that there was a place in the financial system for Bitcoin, for crypto, right? ETH had come out by then, and it was still it was still a bleeding edge, wasn't even a leading edge, but it had proven itself enough that it was clear it was here to stay. How big it was going to be, it's still an open question, right? Still very much an open question. And you actually you changed the word there. You didn't ask about crypto, you asked about blockchain. One of the things that a lot of people have forgotten now is that Bitcoin was born in 2010. The focus on blockchain didn't really begin or didn't really get serious until 2016, 2017, partly because of the ICO craze. The focus was on Bitcoin as a currency, right? And a currency has three characteristics: medium of exchange, unit of account, and storage of wealth. And those are the three. And I would add a fourth to that in the modern era: transferability. And at that point in time, everyone was looking at Bitcoin as becoming a currency. So I was comparing, that's why BTC to fiat, right? As I dug into all this stuff. And remittance payments, everyone thought about remittance payments. Later it became clear that you have to be super banked to use Bitcoin, not unbanked, which is the remittance payments problem. And only much later did people start focusing on the underlying technology. And now I don't think blockchain is actually yet perceived as more important than digital assets. But as I tell people, blockchain doesn't need crypto. Crypto needs the blockchain. But I think the blockchain technology will ultimately be bigger than digital assets. But when I say I don't like cryptocurrency, I use trading tokens as the term for it. I think blockchain will be much bigger than trading tokens. You need tokens technically in the sort of old Ethernet token ring sort of approach or definition. But in terms of trading tokens, which got all the attention at first, blockchain is taken more and more of that attention. I don't think it's even quite got the majority yet, but I think ultimately blockchain as a technology, a decentralized ledger, DLT technology, will be at least as important as trading tokens.
So when you're managing the kind of explosive growth that you experienced, you seem like a super humble guy. How do you stay grounded? How do you separate your ego from the execution and sort of the results that you've been able to produce?
Failure keeps you, look, it doesn't matter how good you think you are. It doesn't matter how smart you think you are. It doesn't matter how well organized or good a manager you think you are. You will fail. I have failed. I have had companies just go down completely, and anything can fail, and it can fail at almost any time. There are in fact, there aren't any companies that are bulletproof, right? I mean, look at Bear Stearns during the 2009 crisis. If you would ask anybody in 2007, Bear Stearns too strong to fail? Is Merrill Lynch, right, with its bowl and everything else, is it too strong, too big to fail? You had taken a poll in 2007, 70 some percent of all people, all, heavyweight TradFi guys would have said, yes, it is too big to fail. And they both failed. And, companies had to be bailed out at different times. Everything can fail. If you want anything to keep you humble, failure will do it for you. Because what you think about what you're doing is not particularly relevant.
That's a great answer. So I'm going to move on from crypto in a second, but crypto's been through euphoric highs and brutal winters. What did the volatility teach you about human nature, yours and everyone else's?
It's really easy when things go well to plan. That on the legal side, I used to work as an attorney. It's like I used to, after I'd gotten some experience, it's like, hey, you want to draft a document that discusses this transaction when everything goes well? Not a problem. You want to negotiate a business deal, whether it be an acquisition or some sort of cooperation deal or an investment like I do nowadays. If you assume everything goes right, piece of cake. You can definitely do that. But when in terms of in managing a company, planning budgets, planning people, planning the evolution, the growth of a company, you assume things are going well, not a problem. Takes a certain amount of skill, granted, but not a huge amount. The trick, whether you're drafting a document, doing a medical treatment, negotiating a deal or negotiating investment, organizing a company, managing an entity, and I manage a lot of them nowadays, you have to plan for when, not necessarily failure, right? I'm not talking about everything that's going to, catastrophic failure. Although, honestly, particularly when you're negotiating any sort of transaction, you have to think about tremendous success and catastrophic failure because people spend all their time in the middle, and that's sort of a silly thing to do. When you plan, you have to plan for things going wrong. The ideal is, for instance, you hear for individuals should have at least 6 months of savings in their bank accounts, equivalent of 6 months of salary or 6 months of expenditures, whatever. It's an arbitrary number. It could be 3, could be 9, could be whatever, 4.75, something, right? It's the same thing with a company. If you're not just a startup and you're fighting to keep going, and I'm running one of those now, and it's really a week to week, day to day, month to month sort of exercise. You want to plan for downside. You want to plan for when things go wrong. The easiest way is having lots of money around, but that sometimes actually hides the problem, right? Because you can just spend money to cover up the issue. If you're a money losing company, maybe it should be, put out of its misery or something like that. But you always want to plan for as many contingencies as you can. There are too many people that focus on what do I do if things continue? What do I do if things evolve as I expect? That's not that hard. It takes skill. Don't get me wrong, it does. But you need to plan for the unexpected, particularly the negative unexpected.
Great. As a certified exit planning advisor, what sort of lessons do you bring into that? Thinking long term, how do you help founders or investors see beyond short-term profit and focus on enterprise value?
It's funny, the certified exit plan. I don't know if there is such a thing. There should be. We're raising money for the third vintage of my VC fund now, and you get a whole variety of questions. But some of the best questions I found are practical ones, like the one that you just asked. Okay, VC fund, you got a 5, 6, 7 year life. It's a little bit shorter in the blockchain space, a little bit longer in the TradFi traditional finance space. But what's critical is the exit. Everybody's happy to give you money. You have paper 5, 10x, whatever you're doing. But hey, when do I get the cash? And that's really, really tough. It's a very important question. And it's something where the average investor puts their money in. They assume they're going to make more money. In many cases, they're right. In some, they're not. But what they almost always overlook is what you ask about. What is the exit, right? The big dramatic ones are an IPO, especially nowadays, right? When companies stay private so much longer. It's not a practical exit. There used to be 10 years ago, there were like 8,000 companies on the NASDAQ. Today, there are 3,500. Going public isn't a sport. Going private is a sport nowadays in the US in particular. But the exit needs more attention. And it's usually a consolidation play bought by a competitor or a near competitor. Sometimes you're bought because people want to control the company, and so they will they'll shut you down. Literally, they want to just get rid of a competitor. Sometimes, more often, that's unusual, but believe me, it does happen. They want a technology, you want people, so you buy out a company, a consolidation play. Sometimes it's an outside provider, especially a PE fund that does a roll up, so they buy a whole bunch of different companies in the same or very similar sector. Sometimes it's financial investment because someone just they don't care what you do, they like your cash flow. So there are a lot of, and there are other ways. There are a lot of possible exits, so I think, so there's not a single answer in terms of which of those exits you do. But the answer to your question, it's a really, really, really good question, is are you planning for the exit? Because I used to, when I was between a couple of jobs doing something between projects, I was doing quite a bit of consulting, and it was all on what I call positioning a company for investment, whether that be a sale or an outside investor or even a debt, where you have to pass a due diligence, right? The DD process. And what that really means is someone digs into your company and says, okay, is this investable or not? Startups, as they evolve, become ever more less investable, ever less investable because they start up another subsidiary, they hire some consultants, they get what deal guys call hair on them. And so what you want is a simple company where all the assets are in the company and all the intellectual property is there. You don't have any legal problems, don't have any regulatory problems. You almost never find a company like that. And over time, those problems accumulate. But people within the company, because they're not M&A guys, they don't really know, they don't even recognize that they're problems. It's really quite funny. And when I first started doing M&A, I was talking to some very senior businessmen. They were looking at buying their businesses. And they were asking me like these really basic, simple questions about M&A. And I thought, the heck? At the time I was in my early 30s. These guys are in their 60s. They know everything about M&A. And what I realized is it sounds pretty obvious, but the vast majority of businessmen, even experienced businessmen, have never bought or sold a business. They don't know how to do it. They have no idea how to do it. And I was stunned because, heck, I'd done a number of deals by then, and now I've done probably not hundreds, but close, billions of dollars tens of billions of dollars. Most people have not done it. So they're not stupid, right? As the phrase goes, stupid is forever. Ignorance is temporary. Very bright guys who were ignorant, they just didn't know. And so I was in the interesting position of explaining a lot of the stuff to guys that were, 30 years older than I was, and guys who were theoretically on the other side of the table, but they generally trusted me. And I was, always honest with them, trying to explain it to them. Most people just don't know. So the same thing on an exit. You have to prepare a company for an exit, generally a sale of the company. And most people, when they set up a company and it evolves over time, they make it harder and harder to buy. And a little bit of tweaking, even very beginning when you're designing the company as you think about an exit, can really, really help. And it could easily add significant percentages to the value of a company. I tell people, look, if you just straighten out your documents and everything's in one place and people can answer questions quickly, the value of your company will go up by 20%. If you get rid of some of the bigger problems, the hairier problems on a deal, you can double or triple the value of your company. And I'm literally not exaggerating. The company does the same thing. Overall finances are the same thing. It's just better organized, better run, better structured.
That's great. I'm going to go off script here for a second because I'm just kind of enamored by the conversation. You're sitting across the table from your 20-year-old self after everything that you've learned, and your 20-year-old self is saying, what do you have to tell me about what's to come and what I need to do and how I need to prepare to succeed? What would you tell yourself, your 20-year-old self, about life and everything that
Find
you've been?
Find a mentor. By far, the biggest thing anybody can do is find and listen to a mentor. I never had a mentor. I serve as a mentor very happily, very proudly right now to a number of people. The weirdest thing is I fired a guy once and he said, would you be my mentor after this? Because he thanked me for firing him, it's a whole different story about how you do things like that. But I never had a mentor. I learned, I'm very analytical. So I analyze in every situation, goes well, goes poorly. I always analyze it. And it took forever for me to figure out some things that just seem painfully obvious right now. And I very much help out. I have two little kids. I have a 5-year-old and a 10-year-old. I started having kids early in my life. And I try to, I mean, they're too young to, bring them on a lot of concepts, but I'm also, in addition to being a father to them, I'm also trying to mentor them, and I'm planning for when they're older and mentoring them. But I didn't have that, partly because I was too stubborn and thought I was too smart and thought I was too good. I don't need a mentor. Partly because I changed careers, changed life. I was in the army, all kinds of stuff. So I changed situations so much that it was difficult to find a mentor. But in reality, and my father is your father is often a mentor. My father was not at all. He was raised on a farm, although he never went to school, and he did actually ended up running a tech company, building computer memory. But he literally couldn't turn a computer on, and his parenting style, as one of nine kids, was not very intimate management or stuff like that, or intimate help or whatever you want to say, was not just not had no desire to become a mentor. I didn't really understand the concept. So I was probably in my 40s before I thought to myself, oh, okay, I now have a decent handle on the world works, how the world works. I wasn't in my 50s when I started having kids. I said, okay, now I'm ready. I'm patient enough. I understand enough. I would have been the world's worst father as my 20-year-old self. I mean, horrible. In the 30s, marginally better in the 40s. And when I knew I was ready, I started having kids. But that is the biggest thing I think in anybody's life that you can do is have a mentor, because you have two ways of learning. You can learn from your mistakes or you can learn from somebody else's. A mentor helps you learn from somebody else.
Great. So if you had to summarize, I'm more interested in your life philosophy than your investment philosophy, but could you tackle both?
Wow. I can't give you one rule that fits both. Or maybe I'll give you the investment rule. I'll give you the investment
We
rule
can
and
make two different philosophies, but yeah.
tell me other applies. Look, we had a guy who just agreed to put 10 million into our VC fund, the third gen. And so we're raising a small one, right? Because you do very early stuff. I like that. Better multiples, a little more risk, but if you know what you're doing, you're okay. We're only raising 75 to 100 million in this pre-seed seed blockchain fund. He's putting in 10. He just last week agreed to put in 10, which is a nice, almost too much from a single investor. But anyway, very good guy, very nice guy, known him for a while. And we started talking when I met him face to face in London last week. He started talking, asking me questions about how I viewed Bitcoin. He has a lot in Bitcoin where the, prices are going to go and stuff, all these crystal ball questions, which, I've got an opinion, but opinion are like certain body parts. Everyone's got one of them. And he said, should I move part of it over into, and I just stopped him and I said, look, the question you just asked is a brilliant question but it contains something I don't think you realize, but you should realize it. And that is most people, when they ask themselves an investment question, it's a binary question. It has a yes or no answer. And it's the stupidest question that you can ask yourself about an investment, because investments generally don't have to be binary. Very, very rarely do they need to be binary. And it's like, when do most people invest? Most people invest when they have money and they've got money for a while and they invest quite quickly. It's like, okay, the investment world doesn't care that you happen to have money in your pocket. That's not the best time to invest. Don't be in a hurry. But then most people do the binary question. If you'd done the binary question, should I sell my Bitcoin or should I hold on to my Bitcoin? And instead he asked it, okay, look, uh, should I sell a portion of it? And so I wrote him later. In fact, I wrote him yesterday and I said, look, I would take, because we've been exchanging information on this, I would take 5% every time there's a peak, a temporary peak, take 5%, pull it out until you get about 25% of your digital asset investments, at least out of Bitcoin. I mean, this guy's a real Bitcoin fanatic. And so I understand that. So I can't give him the best advice I would give him out of the blue, which would be a lot less. But I'm trying to, talking him off the ledge sort of slowly, but he's open to a non-binary question. So the concept of DCA, dollar cost averaging, which is sort of like, you cut a check and you invest every month in whatever you're investing in. That concept has been, I think, a bit too dumbed down for the general retail public. Most people are actually smarter than that. They don't need it dumbed down that much, but it's an easy answer. So people are comfortable with it. But often when you go in and out of an investment, in and out of a position, people ask themselves a binary question. Don't. It's very, very difficult, all in or all out. Instead, you can almost always do it progressively over time. With rare exceptions, and they do exist, but with rare exceptions, a binary question and a binary answer, it just doesn't make sense. And it's something I tell people in a lot of areas, like when you talk with, especially when you talk to like finance guys, attorneys, doctors, and stuff like that. The quality of the question dictates the quality of the answer. People spend a lot of time attacking answers. What they don't do is spend a lot of time formulating the question to elicit a really good answer. And actually make it very general so that the answer is all over the place, which makes it very expensive and very long, or they just don't really think about it and they end up supplementing the question repeatedly. In fact, in conversations, you can see this. People ask a question and they think, oh, that wasn't a really good one. And the other guy is starting to answer it, and you modify your question already. And it's like, just ask the one question, shut the hell up, let the guy answer. And people generally ask poor questions, but especially in the investment world, they ask very, very poor questions. Don't make it a binary answer. That will help you avoid the massive pitfall. You also will avoid certain massive peaks, but how many people really, really have them? And they'll tell you about when they made a lot of money. They'll never tell you about the 37 times they lost a lot of money to allow that one time to happen.
Yeah, that makes sense. Now I'm pushing back on this because I want now the life philosophy.
I mean, I don't know that there's a single rule for life like that. My philosophy, one of the biggest things that affected my life, and I'm sort of not sure this is the best answer or not. I've usually hedged my bets. So I've had 2 jobs or 3 jobs or something. I was very rarely in my life completely willing to go all in on something. And on the one hand, I think that was probably good. Like, for instance, when I was in the Army, I initially enlisted. Then I went to officer candidate school. I got commissioned. It's all this stuff. Stayed in the reserves. I was on active duty for 7 years. Stayed in the reserves for 25 years. Now, you retired lieutenant colonel in the United States Army on top of everything else I've done. And in a way, I was hedging my bets because while I was on active duty, I was going to school all the time because I dropped out of school to enlist. Whole different story. But got my undergraduate degree, and I really wasn't very up on degrees because it's like it doesn't matter if you have a degree or not. What matters is what you know, which theoretically is right. But the problem is, how do you assess that? And the easiest way to assess that is through a degree. So I said, okay, you guys want degrees? I'll give you degrees. And I got 4 of them in 5 years, right? From JD, LLM, MBA. I mean, I got all this other stuff. And I got my last degree about 15 years ago. But I've never gone completely all in on something from a professional standpoint. I've always hedged my bets. And in one way, I like that diversification. And in fact, maybe the life principle would be diversification. Like, I have a Luxembourg passport and a US passport. I've diversified my citizenship. Diversification, I think, is a really good investment principle. I think it's also a really good life principle. But there is a downside, and that is when you go personally all in on something. And you can do this at any age. People encourage you to do it younger. But, if you really believe in something, do it. I wonder at the same time, I've given you this piece of advice, this life principle. I'm not 100% certain it applies in all cases, but I am 100% certain it applies in 99.5% of the cases, because there are very few circumstances where you just want to shut everything down, personally, professionally, everything else, and go all in on a single thing. It does happen, and people are sometimes wrong. They pay a high price for it. But I think that would be both a life and investment principle, and that is diversification. Everything that you possibly can, you should diversify.
I love that. So going back to your 20s to your 30s, moving from that period of your life from where you might be in survival mode into landing on your feet and you're now thriving. What were the things that you learned along the way? What changed habits do you practice on a daily basis that are sort of non-negotiables and sort of keep everything running?
I don't know about being non-negotiable, but let me take a piece of advice I gave to a guy who runs a startup. Was at one of our events, also in London, last week, and he started talking about, that I'm running this startup, and I really find it difficult to do all this long-term planning and keep the company running and everything. And then so I gave him some advice that almost I hadn't really thought of, I hadn't really voiced, but it not only applies to running a company, it applies to your life as well. And I did this wrong. I don't anymore. I do it right now, but I did it wrong for decades. And that is, I always think about, let things bother me. Hey, where am I going? How far? Am I moving the right direction? Is this good for the long term future and everything else? And the company is the same thing. It's possible to let those sort of questions lead to the lovely phrase analysis paralysis, right? But it's not just that. It's you spend so much time thinking about the future, you screw up the present. And I learned something long time ago in a company as an employee, mid-level and then more senior, you could care too much. If I were really, really, really concerned about the company, I would try really, really hard. And it was actually counterproductive. There was blowback from that. And then I looked at a couple other people. I thought about myself, and then it was really hard for me. But it's like, okay, let me invest less of myself in this company. Let me care a little bit less. And I know that sounds totally counterproductive and really horrible, but you can care too much. And then every little thing becomes a big thing and it becomes scandals, and keep a distance. Keep a distance from things once. And so on a personal basis, like I told this guy, look, set aside 1 day a week, at most 1 day a week, during which you'll take a couple of hours, think about the future stuff. Otherwise, just manage the damn company. Worry about the day-to-day stuff. And in people's lives, it really is important to do the same thing. If you spend too much time looking at the long-term stuff, you're going to mess it up. Because think about it, you have a long-term plan, and you're going to, for 5 years, whatever it is, you're going to school, you're having kids, you're starting a new company, whatever. It's a long-term plan. And well, kids is more than 5 years, but you look at it, and if you look at it 500 times during that 5 year period, you have to be 500 to zero, or you're going to change something. And if you get in the habit of changing something and you're thinking about it constantly, out of those 500, those 500 times you think about it, you're going to rethink about it, come to a different conclusion 50 times. But what that means is you're changing your long-term plans 50 times over the course in this example of these 5 year periods. Or this 5 year period. So the advice I would give is don't spend too much time thinking about the long term. Sit down, think about it, talk to people, talk to your mentor, work out all the details you can, and then work out execution, implementation, doing what you plan about doing. Don't rethink the long term too often, because you'll screw up the long term. And I've seen so many people do this. It took me a long time. The Army actually showed me many things I got out of the Army. I had a really, really good experience because I signed up for a lot of schools and stuff. But the Army showed me one thing that's been with me to this date, and I really use it to my kids, except the Army showed me. I signed up for a bunch of schools. I did all those schools. It was like a 3.5 year plan. I'd never done anything for 3.5 years in my life. I dropped out of college after 2.5 and changed. I didn't change universities, but I changed majors several times. It was just very, very, it wasn't as stable as it could and should have been. And the Army showed me that, I can actually do a long-term plan and implement it. It's possible. That gave me great assurance. And that's why I've got the degrees, I've done the stuff I've done. But even with that, I change too often. Mentor will help you a lot with that. But overthinking is your biggest enemy. Make the plan. Like you have plans for getting real, right? What are your plans? Make that a success. Go forward, but don't rethink it every day, right? Don't think you're doing something wrong every day, because you're not. It may be suboptimal according to some set of standards, but you can't beat yourself up about it. So you set a time, day a week, a day a month, probably, given where you are in your career. Me, I do it for different projects. I do it probably once every 2 weeks. And then don't worry about it. Work on the implementation. As I tell people constantly, execution is everything. Nothing else matters. There's an old phrase, not very well known, but I like these sort of obscure aphorisms. And that is, the best book ever conceived was never written. And that's because somebody somewhere had this brilliant idea for a book and didn't execute it. The only thing that matters is execute. Brilliant ideas are free. Brilliant ideas cost nothing. They're worth nothing. The only thing that matters is execution. There are a few exceptions to that, but as a general rule, so I say it so often. I was working with a guy a retired guy, came out of retirement because he wanted to get involved in digital assets, which says a lot about the guy. It's actually quite interesting. So he's even older than I am. One of the things he did is he bought my entire team T-shirts that say execution is everything, because I was really beating him up about it because he had some lessons to learn, even though I'd been around the block. TradFi guy, very experienced TradFi guy, and he was wise enough to understand that he didn't have all the answers. And he heard me say that so often, he got everybody T-shirts. We laughed and laughed, and everybody understood why. No one had any questions as to why he had done that.
Okay, so the best books have not been written, maybe on the topic of execution, since you were just talking about it. Are there any books that pop out to you that have shaped your experience or have sort of given those mentor sort of principles?
I really like that question. And the answer is a categoric no. And I'm not sure I shouldn't have read, a bunch of management books or stuff, but I've read a couple on, different aspects of doing business. And the way I end up describing them all is 20 pages of information crammed into a 250-page book.
Yeah.
And I'm actually writing a book on negotiations. And what I've decided is however long the book is, I'm gonna have at least 100 examples in in that book, examples of every aspect of negotiating. Because I read a book. It's supposed to be it's like bestseller, all this other stuff. There were 5 examples in it, and to illustrate all the stuff in the book, the guy kept going
Yeah.
back to the 5 examples. In a way, I sympathize because examples are hard. You have to give enough background information to understand the example, and then you give the example. But that was the book when I first saw it, 20 pages information crammed into 250 pages. I thought, geez, this is a good article in some sort of journal or something. Sure as hell isn't a book. And so I've really never been inspired by how-to book, any business book. Been inspired by a lot of books in my life, but it was never about business or stuff. And I've got a good chunk of this negotiations. I've got the easy part of the negotiation book written, the first draft, and now I'm literally just adding examples every time. So it can be very, very clear, punchy examples, but a lot of them so people can relate to it as opposed to just, like I said, 3, 4, 5 examples and lots of blah, blah between them.
Well, that's great. We'll be sure to add the link to that book whenever it comes out to the.
I've been writing it for a while, so don't hold.
It's the best answer because so many of these books are just filled with anecdotal fluff, and you're just like, what am I reading right now? Page filling, so I can get to the minimum page count.
Right. Exactly. Oh, wait, I take it back. There is one book I really like. It is about negotiations, but it's a very short book. It's called Getting to Know, written by a couple of Harvard professors, Yuri and I forget the other guy, Miller or something. I forget. Anyway, Getting to Know is an N-O, not K-N-O-W.
Yeah, yeah,
And it's
yeah.
only about 67 pages long. So I thought, all right, this is already a book I like. But it really, or no, it's called Getting the Yes. There was an answer article called Getting to Know. And Getting the Yes was very good. It was about 50% fluff, but it wasn't 80% fluff. But it was really about positions versus interests. And I love this concept. In the book that I'm writing on negotiations, this is the only outside source I'm using. I really, really enjoy I've taken it much further than the authors have taken it. And because it's still theoretical what the authors are doing, but it's the only one that I have found legitimately helpful.
All right. I mentioned earlier, you've lived a pretty interesting life from where I'm sitting, managed tons of money, traveled the world, lived in different places, been exposed to tons of people. When you think about meaning in your work life and in your personal life, what are the things that are important to you?
I like the way you asked the question because work life and personal life. And one of the things I will tell you is that to me, the principles of success in business, and it's more in the business context. I've thought about them and I've thought a lot about them in personal life as well. They're really the same. And I have told people as I've mentored people in the past, I said, look, if you do this, it will not only help you in business. And I make one phrase and I don't dig any further, not my job, right? You will not only be better in business, but it will also help you in your personal life with friends and with loved ones. And I firmly believe that because I tell people this all the time as well. You can't, if you're managing something really poorly in one area, you're going to manage it really poorly in other areas. Generally talking about different aspects of business, but if you're really screwing up your personal life, it's not often you find somebody who's got really, really good at business and has a really, really screwed up personal life. It happens, right? It does happen, but it's not the most frequent thing that happens. Just like take listening, for instance. I mean, I enjoy sharing my thoughts with people. I try not to ramble, but I also can listen. And people vomit us down. You sat there and didn't say a word for 4 hours. Believe me, I can actually do that. There are levels of listening, for instance. There are levels of reading. You can read quickly, you can read very focused, et cetera, et cetera. And the example I use best for personal things is, you're sitting there, you watch the TV and using a traditional relationship, how your wife says something, oh, yes, dear. And you see it in TV shows, sometimes in movies all the time. And wife says something to you and the guy sitting there watch TV or years ago, reading a paper, whatever it happens to be, sitting on his computer, on his phone, and wife says, yes, dear. And then after realizing that her husband is not paying any attention, I'd like a divorce. Yeah, yes, dear. Right away, dear. And then suddenly she screams or hollers, and the guy sits up and starts listening. And you can see the body language of the idea of listening. People do that, all of that in business as well, right? You sort of half pay attention and all this other stuff. One of the good things that people who work for me, they talk to other people who work for me and say, look, when you talk to this guy, think about what you're saying, because probably everyone who works for me, I've said at least one time, I pay more attention to your words than you do. Because people contradict themselves what they said 3 minutes ago. I mean, I really listen closely to what people say. And if you look at the questions you ask here, I've tried to unpack each of those questions, because people ask multiple questions. And so it gets more difficult to answer them. And I always try to answer each piece, making mental notes. But people don't pay attention to themselves. They don't pay attention, word salad, diarrhea of the mouth, whatever you want to call it. We have all sorts of expressions for it. But when you talk, have it mean something. And that applies very much to business, but applies to your personal life as well. I mean, I sat down with my wife and daughter. My son is too young for this kind of conversation. About 2 months ago, I preach expectation management all the time. And I sat them down and said, look, we have this roadshow. I'm going to be doing a lot of traveling. I travel about once a quarter otherwise, and it works out very well. I sat them both down. My daughter's, 10, said, look, I'm going to be really, really busy. I'm sorry for the time I'm going to miss with you. I'll try to make it up as I can, but I'm not sure I'll be able to. It may be just missing time, but it's a very, very important one. I just sat it all down, laid it all out, managed those expectations, and they get it. And it makes their life easier. It makes my life easier. My daughter sent me a lovely text message. She's in Minnesota with my sister at the moment with her aunt, and said, I miss you very much. Can't wait to see you on Thursday. We're both flying back, not to San Diego where we live, to LAX. I arrive at 1:05. She arrives at 1:00. She's an unaccompanied minor. So my brother and her mother are going to pick her up. And we're both arriving in LAX. Then they go pick me up because I have to go through passport control. And then we're going to the Vikings Chargers game. So I literally land at 1 at 5:15 is kickoff, and we will be there. And so, I try to make it up for them. And I like that kind of logistics. If people laugh and say, only you do this kind of weird stuff, but it's just a question of organization, right? So it's all organized. And those are very much business skills that I'm devoting to the personal relationship and business attitudes. And if you're talking about any relationship, these sort of principles apply, and they make you a better friend. They make you a better husband, a better whatever. And I really find the principles are pretty much universal.
You were finishing sort of managing expectations, and that rolled into what you were talking about earlier, sort of planning for when things go well and when things don't go well.
Right. Well, I think the only thing that may have been lost from that is that, in my experience, general principles that work well in business life work well in personal life, and vice versa. And if you devote anywhere near the kind of attention to personal relationships, regardless of how they're structured, it's the same principles from what your professional life is. That being said, there is an exception to that. And that is, there are times you have to be what I call like turned on, where you're focusing and you're really discriminating and what the words are, and really thinking. There are times you just want to relax. And with my wife, I always say, look, I am beat. I need an hour off. Just don't expect a lot from me right now. And that, I think, really, really helps, because we've all been there. It's not a surprise, but the problem arises, you don't say anything and you need to relax. And then it's like, no, I don't, get away. So that the idea of managing expectations and anticipating, understanding what condition you're in psychologically, physically, et cetera, that really, really helps. And again, it just falls under expectation management.
Yeah. And having enough awareness and consciousness to know when sometimes your subconscious is just running the show. So you need to call.
Understanding yourself. Absolutely. That's, again, one of the reasons I didn't have kids till later, is because I knew I didn't understand myself well enough, wasn't patient enough, couldn't be tolerant enough to be a good father. And so I didn't.
All right. Well, we're already over time, and I really appreciate that. To set expectations with you, I've only got 2 more questions for you, and they're softballs. The first would be, when you think about your life, what do you want your legacy to be? Not in terms of percentages or performance, but in terms of impact.
Well, there are two things. One is I never stop living. I see too many lives where people just stop. The concept of retirements to me is one I really don't get. But even when people retire, do something with your life. It's not too many examples I see where people go from living to existing. And it's one of the reasons why often people don't live very long, my theory, live very long after they retire is they don't have a lot to live for. I mean, Sally on is 5 years old. My son is 5 years. I tell you, I'm just getting started. I was telling some German relatives, if fängt wieder nach an, right? I'm just getting started again. I love life, and I'm living it to the maximum extent I can, and I'm not slowing down, right? If I had a hero in terms of working, it would be somebody like Warren Buffett, right? Who's still, only now I think he's 97 and is retiring. There's something I like because he likes what he does. So he keeps doing it. But in terms of a legacy, I mean, that's just me while I'm living it. In terms of a legacy, it would probably simply be I left the world around me, the world that I control, better than when I arrived. I look at relationships like that, especially girlfriends I've had. I'm now married, so it doesn't apply anymore. But I always like to think it's sounds kind of weird, and maybe be kind of an excuse for breaking up. Who knows? But I always like to think I left my girlfriends better off when we broke up. And I don't know. You may get a call or two saying, "No, we didn't, the asshole." But I like to think that just in general, leave the world a better place than when I got it. Particularly with respect to my children, obviously, but even with my wife because she's a wee bit younger than I am. I just want to. I don't want to make the world any worse than when I got here. The world has a lot of problems, a lot of wonderful things about it. I hope I increase the latter and not the former.
Yeah. Great answer. And the show's called Getting Real. So before we wrap up, when you think about getting real, what does that mean to you in business and in life?
The first thing that comes to mind, this is quite funny. First thing that comes to mind is being honest. I'm a relatively bright guy, and I've always known I could manipulate people, could persuade them to do things that they might otherwise not want to do. And I hated that. I hated that it was easy. Sometimes I would give into that and do it. And I spent a lot of time, 10 years when I was much younger. How can I address this? Because I don't want to take advantage of people, although I could. And I realized that no matter what answer I gave to that question, it was also sort of manipulating. Even if you're being 100% honest, 100% frank, it's still, you're still manipulating that. So to some degree, it's okay. Look, we all have different facades. You act one way to your children, one way to your spouses, your friends, at work and everything else. So different facades, not in a negative way. It's just, what is the correct behavior in that environment, let's say. And so my goal was, what I decided is that, all right, it's inevitable that I try to get people to do what I want them to do. Everyone does that. But the way I'm going to do it is by being as honest as possible. And it's not telling everybody everything. That's ridiculous. You can't do that. But it's really trying to be as honest and fair as possible, even sometimes helping, especially in a business negotiation, helping the other side so they'll actually get a better deal. But personally, it's the same thing, just being honest, not trying to manipulate people to achieve a better outcome for you and a worse outcome for them. And it really has taken a lot of my thought in life because so many people just overtly try to manipulate, not even clever. You could see it. And it's like, why are you doing that? It's just so counterproductive. So I guess that's one of many rules, principles I try to follow. And if you notice, there are a lot of them. I drag out a lot of aphorisms, and that's, as I said, I'm very analytical. I think about virtually every interaction after it happened. I'll think about the things I said here. How could I have made that better? Even if there's something bad, how could I have improved it? If there was something bad, how did I screw that up? It really, you can do too much. You can second guess yourself. And I've learned to do it in moderation. But like I said before, spend most of your time working on the now and periodically think about the future and the generalizations and major changes in life. You can really do that a lot about your own psychology as well. And so I try to do that in a measured way nowadays.
Can't thank you enough for joining from Germany, Tim Enneking. managing partner, investor, and strategist who's navigated not only the markets but life. Thanks for getting real with us today, and thanks for sharing. I feel like this was like a mini mentorship session for us all. So thank you for being a mentor.
Thank you very much. Thank you for the attention. Great questions. I really appreciate it. And you've certainly learned how to listen. My congratulations for that. You let me ramble on. Thank you very much.
Well, thank you. I will be in touch with you in the weeks to come here. I'll go through and have everything prepared. So
Marvelous.
I
Thank you very much. Very much appreciated.
great talking with you.
All right. Take care.
Bye bye.